Coming to you live from downtown Detroit, this is Benzinga's Premarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday, June 1st edition of Benzinga's Premarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We've got some news and some movers. We got auto sales on the hopper. We have end of the month moves in UNH and Charter. McDonald is ex-dividend today. We had L Brands comps. We got some Macau data is moving the gaming stocks and some earnings as well. HPE, Palo Alto, Express, Dollar General, MBLY, and LULU and VMware are tonight. Our guest today is at 8:35, Nate Tobik. He is investor and the founder of CompleteBankData.com, a really great source for financial sector data. So we're going to talk to him about the entire sector. Joel, I know you're running a little late this morning, but you have had time to look at the S&Ps, and you're going to tell me how they're doing.
They're doing okay. And you said in the hopper. Is that on the hop or in the hopper?
Both.
I have a 8-star number for you here, Dennis, in the S&Ps. 2417.75. That's the all-time high. We got 3 other highs up in that area. That is the super major resistance on the downside. Really haven't spent much time below the close of 2411. That will be your key for today. Moving over to the crude oil market. Crude snuck over $49. That didn't last long here. Down a nickel at 48.27. And gold, I think I come in every day here, and it's trading in the at 1260 area, down $6.5 at 1268.90. Silver down 29 cents at 17.12. Dennis, aren't you glad the correction is over that we had?
Well, it ended fast, eh?
God.
We get the correction yesterday morning just after the bell. They opened up and started hitting all the Momo stocks. Google was getting hit hard, and actually Google ended up closing down. But they even had Tesla red on the day for a minute.
Oh.
That didn't last long, though, because they came in and bought Tesla right back to an all-time high. Can't stop Tesla stock. But, Joel, it's an incredible rally. When does it stop?
Never. Absolutely never.
Never. This forever. It's just going to go up forever, straight to Dow. What was Kenny Glick's target?
24,432 or something like that.
Where are we at on the Dow now? I don't even follow the Dow. Where are we at? Where are we on the Dow?
Just over 21,000.
We're only 3,000 away. We can get that, the slow, steady climb. Maybe not that soon because it's a pretty slow climb, but steady as she goes. That is the story of this market. And every little 0.5% pullback, they scrambled to buy the stocks once again.
But listen, man, I got a number for you, though, Dennis. I told you it was an 8-star. Going back to May 25th, you made that all-time high at 1775. That was last Thursday. Then you made a high at 1575, 17 even at 1675. So you have a quad top here. Is it time just to lay out the shorts here and just put a stop up there at 18 even?
Joel's trying. You've been trying to call this top for 7 years, haven't you?
But this is the top here.
This is it, though. This has got to be it.
Wait, what happened to
oil
oil
one thing,
here?
Joel, you're going to get the top eventually, because if you call it this much, you're eventually going to get it.
40-cent move here in oil. Do we got something going on? Did OPEC say?
Oil's been bouncing around a
Look at
lot
that
here
thing.
after hours. Okay, so we had data that came out at 4:30. It got a big lift off that. Slowly leaked. The oil leaked, no pun intended there, down back to flat. And now we're going to pop here again. Oil's been bouncing around.
Look at this 5-minute chart here. We just bolted up here. I guess it's not as pronounced. Let me do the 1-minute chart. Hey, Dennis, what do you attribute that sell-off to yesterday? You think that just they hit the momos? Did you see that the Chicago PMI came out and it was like a bad number, so I think that contributed. But like a half hour, 45 minutes, they said, oh, we made a mistake. We made a mistake. It's actually, instead of 55.5, it's 59.7. So
I didn't notice that they made a mistake,
yeah,
but they said that. That's interesting.
They made a mistake here. So, all right, well, we got some movers here. Where do you want to start out?
Let's start with the earnings there. We'll jump over there and let's go to Palo Alto Networks from last night. It's getting an enormous lift, and we talked about it yesterday on the show, saying 120 we start getting above there, and there is air in there, and it looks like it's going to gap into a gap. And we are up 12% here. So last earnings report, they destroyed it. This earnings report, they're buying it right back. $133.74, up 15 points. Joel, I don't even know if you can find a number on this because this has a 30-point gap I'm looking at back from February, and it's right in the middle of it.
Spencer, were the numbers that good, or is it just some guidance?
I was gonna say joke and then I didn't, so now I'm laughing about it to myself.
Well, tell us.
No.
It's too bad.
No, Q3 adjusted EPS 61 cents versus 55 cents. So they beat on the EPS by 6 cents. Sales of 431.8 versus 411.9 million dollar estimate. So they beat the sales estimate by about $20 million. As far as Q4 guidance goes, EPS coming in higher than the estimate. Sales higher. Sales are in line.
I got a number for you.
Give it to me.
135.
Is that the after hours high?
Yeah, and how many times have you seen this? Like on the initial spike, you'll hit an area, and that might be the high of the day. That's what I'll give you. I don't know if it's going to be the way this thing's moving, but initial spike 135, and then you've made another couple runs at it, right into some problems there. So someone wants out at a piece at 135. That's on the upside. On the downside, 132. That seems to be the number after you taking that out. That's been the low since about that was a low last night. So 132.
So we had the big pop, price discovery, and then we've kind of just been range bound. You're telling me since then.
Exactly.
Between 132 and 135.
Yeah.
Joel always finds those numbers for us. I like 135 as resistance because it's a nice round number. Probably some option strikes there, and we know how we like those. So I like that number.
This could be like the ugliest looking chart ever with the gap into the gap.
To try to figure it out, yeah, gap into a gap. It's just like repels the 120 handle. Like you cannot trade there. Gaps right through it all again, and we're up at 133. So difficult chart. We got a lot of those other cybersecurity stocks up in sympathy here. FireEye's trading up 2.6%. CyberArk, CYBR, is bid up. It hasn't traded this morning, but I can tell you last night it was trading fairly actively around 49.27, which would be up a little bit here. So little sympathy move. Not huge sympathy moves on those couple, but a little bit this morning.
Yeah, it's funny. They moved off the that cyber attack, and then now earnings, the true fundamentals, and Estraza. Hack must be getting a lift from this too, right? Yep.
Hack's volume, though, is so low. It hasn't even made a trade. I don't know. Did it make a trade last night? I don't see any volume here this morning on the Hackster.
What's the daily? I thought this thing would pick up some more volume here.
What's the volume? What's the average daily volume on that thing? I know it traded 259,000 yesterday.
It's kind of bounced. I'd say just looking at this, I see the biggest volume day close to 3 million. But a lot at 400,000 or 500,000, so I don't think it's much more than 600,000-700,000. So that's I'm surprised. I thought there would be a little bit more volume in that. But
trying to find what the holdings are. Do you? I don't know if we have that anywhere. It'd be interesting.
Yeah, maybe Spencer can do that.
Spencer, if you want to dig and find out what Hack actually has, you can go digging a little bit here, but we can bounce back to that. Actually, I'm going to need you right away anyway, so I'm going to more earnings reports, though.
You ready? You ready for the holdings?
Oh, you already know. Okay, what's Hack got?
No. So FireEye is a little under 5%. Imperva 4.5%. Qualys 4.5%. Gigamon 4.19%. Proofpoint, Checkpoint, and Trend Micro are all.
How much is Palo Alto? PANW.
PANW is 2.84%.
So it should be up here today, I would think, at the very least here. I don't know how much lift it's going to get because it is only 2.5%. When you get these ETFs, they have like 10-20% of the stock, and then you get a 15% lift. It's just basic math that the thing's going to be up substantially here. But the whole sector is going to be up a little bit here. So I'd be surprised if Hack wasn't up, at least 1% or so. By the end, at least a couple, maybe even a couple percent.
All right, cybersecurity stocks getting a lift here this morning.
Jumping over here to other earnings plays, and we had quite a few actually. Box we had OLLI, we had Hewlett Packard Enterprises, had Express. This morning we had Dollar General, Ciena. Spencer, I'll let you lead the way. Where do you want to go?
Let's start with HPE, Hewlett Packard Enterprise Q2 adjusted EPS of 35 cents, which is in line with the estimate, and sales of 9.9 billion versus 9.64 billion. They also updated their outlook for the fiscal year, coming in. They had a fiscal year GAAP EPS outlook of a 3-cent loss. Now it's a 7-cent gain, and they reaffirmed the adjusted EPS for the year.
It's selling off a little bit here, but it's very muted. Even the activity last night on the report was very quiet there. It was actively trading around 1840. That's where it was last night. It's 1830 to 1845 here in the pre-market. So kind of hanging out. I mean, you got some critical support, 1850. You'd like to see it reclaim that. Starts going below there, and you start to think maybe 18's on the radar.
1918. That's the only number really to pay attention. That could be. Is that the all-time high here in box? No, it's been higher than that. I like 1918 on the upside here if we could get to that level. The Brentster's piping in here. Another report from OPEC. What a shocker. They considered an extra 1 to 1.5% oil supply reduction and could revive the proposal. So once again, more rhetoric out of OPEC.
It's just bouncing around the oil, so we're giving it back again. So we got another pop on that data and then giving it back again. I mean, oil just feels heavy, doesn't it?
Yeah, I mean, here would
bring up the chart. Bring up the chart on the USO. I like looking at the USO because I don't like playing for futures quotes.
Yeah, we know that.
Bring it up here.
That's such a boring chart, Dennis. I mean, look at this. I mean, it's been range bound. Let me see. This is a weekly here. Let me even see with a daily here with the USO. Boom, boom. I mean, 940. I mean, that's
what were the lows back last year when we were, down? Because I'm just saying the USO lags, obviously. It's got, the contango problem going on, which obviously it's going to lag the overall index long term. Curiously, because where are we? We're at like 46, 47 bucks on the crude futures. Where are we?
We are at 48.40.
Okay, 48.40. But the low we were at was like at 27 bucks.
Yeah.
So we are still significantly off the lows on the crude futures. But because of the contango problem that USO has, what was the USO low from, beginning of 2016 when everybody was throwing in the towel on oil?
7.67.
Okay, and it's come back quite a bit from those lows too. Not up as much as oil futures, but it hasn't lagged maybe as much as I would have thought.
26.05 has been it was the low in the rolling front month contract of crude, and this is looking at a weekly chart here, like 55, man. That was the weekly high several times. So a bit in a range going back since December, 45 to 55, kind of heading towards the lower end of the range.
Okay, continuing on the earnings parade here. Let's go to Dollar General, who reported here this morning. We heard from Dollar Tree just last week, and DLTR got the lift and then the drift back down. Well, Dollar General has got the lift here as well. Is it going to follow suit and give the gains back like Dollar Tree did? I think it might.
Well, Q1.
Let me know the earnings first before
Q1 EPS of $1.03 that beat by 3 cents. Sales of $5.61 billion versus 5.59, so a slight beat there as well. Comps up a little under 1%, and they also reaffirmed their fiscal year GAAP EPS outlook, and they did raise their sales growth outlook for the fiscal year from 4 to 6% to 5 to 7%.
Stock, like I said, it was up significantly earlier here, Joel. It is starting to get back some of those gains. What's the after-hours high, DG?
Very, very small volume here at 77. That print was an odd lot, though, but can't see much from the pre-market. But, Dennis, I think this is a little bit of a lesson here. Look at the $76 level. Look at all the lows. This is based as a daily chart here. 1, 2, 3, 4, 5, 6, 7. 8 out of 10 lows right at the $76 area. When you broke down, that was a major breakdown in the stock. Now you're back up here, just one off earnings report. I just see it trading at 76 here. Good resistance and also a level I think I'd keep an eye on. Even if it got above there and came back down through it, I think major support. It's going to be resistance for now.
I think it's going to give it back. I don't know why. Just because DLTR reported pretty good numbers too, and it gave back their gains there that same day. I think Dollar General could actually see the 74 handle here today. That's what
74 handle. Okay.
I'm throwing out a bet to you, Joel. I think DG can see the 74 handle and possibly even the 73 handle.
You know, that's probably like one of your weakest proposals you've ever made.
So what are you not taking me up on it?
No, I mean it's up. I mean, it's only 45 cents away. I mean, this thing will.
Well,
yeah.
okay. Well, I'll give you 74 even. It's a $1.45 away. That's a pretty good bet to win back one of your lunches. I'll give you 74 even. I think it trades $74 today.
Wow, giving back
75.45. I'm totally giving up the edge. I should be giving you odds on that.
Dennis is giving up the edge. What do you guys think? He's giving up a $1.45 edge.
This is a lunch
This is
bet
very
here,
rare.
folks.
This
And
is
it could be a
very rare.
Potbelly lunch. 'cause
Okay,
PEP is
whatever.
back.
You got me. Because we're never going to settle this Ford bet because it's never going to trade.
You owe me like 25 lunches, don't you? Anyways,
I'm
you might as well.
taking
You
it.
dug yourself such a hole here in the lunch bets.
Wait,
You're
hold
just
on,
like the Fed. You're just like the Fed. You just keep printing more lunches.
Let me call my broker. 7401 for 10,000, please. Okay, all right, go ahead.
7401. All right, so the bet is on. I say it can print, and I really give up the edge on this one. I think it can print $74 here today.
Yeah,
So we will see. That's my bet.
Do you have some coffee today or something? You're like,
Am I hyper?
Yeah,
I got up early.
All
I got up
right.
at 3:45 and 4:45 and 5:45. I just keep getting up early. I get up at 3:45 to do, check out the markets, and then the kid wakes up, and then I wake up with a kid, and I basically just don't sleep anymore. And I don't even drink caffeine.
ADP May payrolls up 253,000. That's right. We have the unemployment number tomorrow as well. So I can have a busy day tomorrow with that number coming out. Maybe the S&Ps will move another 3 or 4 points.
Ooh, we'll look forward to that, Joel. All right, moving away from the earnings. We're going to come back to earnings, but I do want to highlight one thing we should have highlighted off the hop. Pinnacle Foods is getting a huge lift here this morning, Spencer. Conagra, which is getting a big lift as well. Is this an official deal or just a rumor here yet? CAG
No,
and PF.
this is not an official deal from what I'm seeing. This is just a report from Reuters that Conagra has made an approach to Pinnacle Foods sometime in the past few days or few weeks, excuse me. But we reached out to them and they declined. We reached out to Conagra. They declined to comment. Now they did Pinnacle Foods. Not an official deal, just a rumor of a reported attempt.
Okay, so both stocks, we got PF popping big time here. This came out about 7 o'clock last night. Obviously, Reuters broke it, and the stock really lifted up. I saw a 67 print in PF. It's trading the 65 handle here right now, but we've also got a case where Conagra is getting a bid here too, so they're buying the potential acquirer as well. And I mean Conagra, it's only traded 1 share here today, but the bid is 30,000 shares. Bidding $39.50. That's bidding up over $1 for 30,000 shares. It's a huge bid. So it's interesting that there looks like they're going to buy both stocks here this morning.
Wow, that's one of the biggest bids I've seen in
on Conagra. That's a big bid intraday, let alone pre-market. So somebody's saying higher on CAG, which is surprising, to me, because sometimes they actually, well, it's still just a rumor, but sometimes we've been saying the last couple of years they hit the acquirer. So Conagra, would be the acquirer in this case, and bidding up $1. I don't know. Seems kind of crazy to me, but a 30,000 share bid. That's actually 2 different bids. I'm not going to argue with it.
Pinnacle Foods, the maker of Duncan Hines, Vlasic, Mrs. Butterworth, Log Cabin, and Bird's Eye. This is Armor Foods also. Here's interesting about this Pinnacle Foods is this is a food stock at an all-time high, right? And
very close.
Yeah, I mean, not big premium here. Hit an all-time high yesterday, so someone got the memo at 64 even. Don't know what the print. Let's see what the print is here in the pre-market. I see 67, 77. So not much of a premium. I'd rather wait and see if this comes back down and kisses the 64. That was the former all-time high. So supported 64, resistance at that print at 67, 77.
I mean, a lot of these food stocks have been in the doghouse here. We were talking about it. And I actually just a couple weeks ago did finally pull the trigger on General Mills here and bought some GIS just because I didn't have any food stocks in my portfolio and I had been waiting for a pullback here. Not that I love the food stocks there, but I think it's more defensive and it's got a 3.38% dividend. So I kind of like it. Everybody got crazy with it last summer when it got up over 70 and there was even rumors that somebody might buy General Mills. I don't see that happening, but there was rumors just last week that somebody's going to buy Colgate. Defensive stocks are starting to come back into favor. So I was looking at the GIS chart thinking, well, it's pulled back enough here where I think there's some value here now. So there's a long-term value play for me in General Mills. But what do you think of the other ones? Like Kellogg's pulled back significantly from its highs. Kraft Heinz is still near its highs. It hasn't pulled back very much, but Campbell's Soup is significantly pulled back from its highs. I mean, do you think there's a play here in these food stocks? Are they cheap enough for you, Joel, or you're just not interested in
I'd be looking
stock?
at them. I'd be looking at them just because it doesn't look. I mean, at least what we're seeing from the interest rate front, a couple of indicators that these dividend stocks are still back in vogue, especially if the Fed takes the foot off the pedal as far as interest rates go. But yeah, these charts don't look too bad. And Amazon has to sell something, right? They have to have the actual food to sell. So they don't have the storefronts. Maybe some of them do, but yeah.
It's difficult for them to come into the food. They will. They're going to do it, but I mean,
they're not going to make the food.
But General Mills makes the food.
Exactly.
So,
that's why.
Yeah, you think like a Kroger gets hit, because they have the physical stores, but Kellogg's, General Mills, these make the food. I mean, this is boxed cereal and stuff. This is stuff that's consumer, very, very stable. People eat cereal even more during a recession.
Exactly. All right. And we also, talked about, Mr. Buffett sitting on just tons of cash here. And, he's,
I still remember I hinted last weekend. That's a great point. We were just saying, Colgate, there was rumors on Colgate, that somebody might be acquiring. And Colgate said no. But somebody was saying that they could get acquired for $100 and got the big pop. It's kind of coming back here. Estraza pointed out here too. CL's been coming back. And I was saying the only person I think that would buy Colgate or potentially is Warren Buffett.
Yeah, that's held the gap and go there. Never came back down to the $72 level where it was trading before the rumors surfaced.
Jumping back, let's go over to Macau data here because we got the casino stocks lifting in the pre-market. We got Wynn trading up almost 2%. Las Vegas Sands is up 1%. MGM up over 1% as well. So Macau data, Spencer.
Yeah, gaming revenue in May up about 24% year over year. 16.5% was the estimate. So they had a very good month.
And that is popping up these casino stocks, which have been on fire, really. Wynn Resorts here back in March was a $93 stock. Now $131 here in the pre-market. Las Vegas Sands, same story, was down around 52. It is challenging 60 here. One thing I will say on Las Vegas Sands is that 60 number, which we're at 59.87 right now, that 60 number looks big to me. I'm going to the book here right now to see if there's anything kicking around in stock, in the book, at 60. 30,000 shares. So that's a little bit. It's not as much as I thought might be there, but 30,000 shares kicking at 60 in the New York Bucks. So I think it has trouble opening over that.
Yeah, you can see the highs back in April just under 60. That looks like a nice level there. Wynn Resorts, remember that thing got in the 50 handle, didn't it? Was it last year or when?
The financial crisis, it really got down there.
I think
where did it go in the financial crisis? Go back to like 2007.
Oh, I'm on Spencer's. I'm on Spencer's. Let me see.
Well, it's a great point though. In 2015, even it got down to $50. So
financial crisis. I think it got lower. No, I didn't quite get that low. We got into the 50 handle during the financial crisis. I guess no one was going to. That can't be right. There must have been a split or something because I'm seeing a negative.
What was it?
I'm seeing a negative. 4.98. I don't know how you get a negative there. Maybe there was some kind of split.
I'll go ahead. My chart only goes back 7 years. So I'm going to go a little bit farther here to another charting service. Just curious as well where the low was. I remember it being lower than that, though. I'm going back a decade here to grab the financial crisis data. I'm just trying to eyeball it because I don't know the numbers. It looks like it was under $25, though. 23? I got about $23.
All right.
So, anyways, significant, but interesting they got back to 50 again, gave it another shot. Now it's moving up here again, $128. So, big moves here for the casino stocks this morning, though. Any other levels there you want to talk about on MGM or Las Vegas Sands?
MGM, I really like the $32 level. That's the one that I picked up here, $32.28. That was a high back a few weeks ago. The daily chart, it looks kind of nice as well. Trading up above it here to see if we get above it. Could be a nice breakout in the casino stocks off the Macau data.
Jumping back to the earnings parade here, we didn't go into Box, B-O-X.
Did we? I thought we did
No,
box.
I don't think we talked box yet.
We
No.
didn't. Q1.
Then what stock was I talking about when we did that?
Did you talk about box?
Okay.
No.
All right, go ahead.
Q1 EPS 13-cent loss versus a 14-cent loss. Estimate sales of 117.2 versus 114.7 million dollars. So they beat on the sales. They just beat on that EPS there. They see the Q2 just EPS coming in line with the estimate. Sales in line as well, and the fiscal year EPS and sales are also both in line.
Initial
BOX,
yeah.
big pump in the pre-market, trading just under. I'm telling you, these big whole cycle. If there's any strategy that you learn from this show, it's about simplicity. And if there's any specific strategy, if you listen to the show for a long time, the one thing that I will preach, it's all about big whole numbers. $20. That is just psychological. Why do those big whole numbers come into play? Because that's where the option strikes are. That's where players will position themselves or stock against the options. And that is the level I think that it's going to run into, at least running into troubles in the after-hour session up at $20.
I think also just for the public too. Like I want to get out at 20. Just put the order in, and it's
institutional money managers do it that way too.
Yeah,
it's like the Las Vegas Sands. Why do we think there's going to be size at 60? Because institutional money manager says, well, I got 100,000 shares. Let's sell 30 at 60, another 30 at 62, another 30 at 65. It's just simple. They just put in the big whole numbers, and those big orders are tough to get through. It takes some stock to chew through those orders.
All right, we got a 1918. That was a recent high. The move. Looking at the pre-market trading, you're trading well above that. So we'll see what happens here. If in fact we can take out that high at 2020, it's actually not that far away from there. Dennis mentioned might be some paper there at that level as well, and haven't closed over 20 here since the middle of 2015. So hasn't been up here in a long time. See if it attracts any sellers.
One more earnings report here of note. Ciena, C-I-E-N, reported here this morning. Spencer's got the results, but it's a 10% pop.
I do. Q2 adjusted EPS of 45 cents versus 37 cents. Sales of 707 versus $695 million. So they beat on both of those numbers. And Q3 sales coming in line with the estimate.
It's a nice pop for Ciena. It was getting bet up a little bit after hours last night, so somebody was excited ahead of the report, and here we are, 25.74 here. Joel, give us some levels on CIEN.
Initial pop 26.40. We've lost 70 cents since hitting that. Finding some interday or pre-market support at 25.60. Haven't traded up in this area. Well, let's see. Not too long. Where did we get up to? We got to 26.84. Back at the end of March, so there is a potential target if, in fact, we could take out that pre-market high. And is DE really trading off $5 here?
It is, and it's because they're buying this other company. Spencer, what's the details here? Because this is interesting to me.
The Working Group for $5.2 billion.
So they're coming in and they're buying this company for $5.2 billion. And now Deere is popping 3.8%. So obviously they feel like they're getting some value here on this acquisition. That's not a publicly traded company, is it, that they're buying?
No.
Okay.
Wow.
Stock, this all-time highs here again for Deere. I mean, the gap and go, and this is something that murders people. When you get these gaps and goes and they don't come back, because sometimes you have people that always look for filling the gap, and they're short the stock when the gap's up, and when it continues to move up like that, it continues to punish them. Well, now you're getting another gap in the chart up to 127, so short's really underwater here in DE.
Yeah, and this has just been like a steady march here, and you can't really, ignore the volume here. Someone is out here buying the stock aggressively, so you're going to have a big gap up. I'll just give you a pre-market high in DE here, 127.50, and must be a great acquisition here, or at least the street likes it. Hit 127.50 in the last three 15-minute brackets here, so keep an eye on that as potential resistance. And is Cat moving off this? Or
a little bit.
Cat's
got some major resistance up at 106, though. Another whole number there. I've got to go to the book and look on this one, because when you see 1, 2, 3, 4 highs right in the same identical area like that, it makes me think that there's something in the book. I see 17,000 at 106, but it's early yet. I think there's probably more hiding there. So, we got up to 105.98 back on April 26th. 4 days ago, we got a 105.93. 2 days ago, 105.86. Yesterday, 105.76. There's just a massive resistance up at that 106 level. And even if it gets through there, the next level, I'll tell you, 106 is an interesting number. 106.44 has 25,000 in the New York buck there. So just giving you a couple of levels where some institutional sizes. 106.44 if you get through 106, but it's a major resistance up here at that number.
Yeah, and this is it's held its earnings gap. It gave a little bit of a scare when it went down to 98 and change, but that nice number sticking out there, 106. That Dennis gave you some paper there as well.
Just balanced out. It just came out here at 8:30, so I'll just quickly give you some highlights. Twitter, 47,000 to sell. Twitter got hit a little bit yesterday, but then they bought it back like they buy everything back always. Just looking, Pfizer, 82,000 to buy here this morning. That's going the opposite direction. The banks are getting a lift here. Most of them actually have sell imbalances, but they're very small. But I'm seeing the banks actually maybe out that ADP data really starting to catch a bid here. I've got Citigroup trading up almost 1% here now. JP Morgan, Goldman Sachs both trading up significantly. Bank of America trading up over 0.5% as well. So the bank's looking strong here this morning just off that ADP data. Mickey D's, we've been talking about McDonald's here, Joel. It's ex-dividend here today. Close was 150.89. It paid a 94-cent dividend, so the adjusted close is 149.95. Stock has actually got a 56,000 share buy-in balance here this morning. So nobody's deterred, even though the thing is ex-dividend. Stock is getting bid up a little bit here. Again, was trading 150.30 from that adjusted close, but Mickey D's has been a monster.
Yeah, I think we're going to have an article out on this thing shortly. The gap and go since earnings, and I counted this up. 17 of the last 25 trading sessions, it's made a new all-time high and a new all-time closing high. And let's see if this weekly chart goes back. This rally, since the middle of April, has already exceeded the trading range that it had for almost 4 years. Remember, the thing was like 80, 100, 80, 100, 80, 100.
Yeah.
Then it broke out over 100, and here's a weekly chart on this thing. I mean, I don't know. When is it going to come to an end here? Run up into the dividend, too, and some analysts nailed this thing, too. It's just the hottest stock in the land. Mickey D's going ex-dividend.
I think when the dust settles here, though, we've seen, last year and this is, obviously the biggest fast food company in the world here, but, look at the food stocks, what they did last summer. Not that Mickey D's is, we're talking, the different foods. Sectors get hot. They stay hot for a while, but eventually they cool off, and when they cool quickly. I think McDonald's one of the hottest things right now, but it's run a long ways, like you were saying, Joel. In a year and a half, it's up 50%. This is one of the biggest companies. I feel like it's too much long-term, too. So I don't think the value is there. Still got a 2.5% dividend, but I like Mickey D's. I like it, but I think it just ran too far for me to be buying up here at 150.
Yeah, and I always bring up one of my dad's worst predictions. McDonald's would not make it. Who would pay? Who would pay?
McDonald's in the television, wasn't it?
Yeah, McDonald's in television. Who would pay a nickel for a bad cup of coffee and a dime for a rotten hamburger? That's how long ago. That's how long ago.
And who would sit in their house and watch some box with, pictures and stuff on it.
Look at that thing, man. Wow, what a move. We'll see if the ex-dividend finds some sellers in it. 150, 115. What's the adjusted close on this one, Dennis? You said 149.
I'll grab it for you. 149.95. So it is trading up.
Can you just talk about how you use that a little bit as, for these dividend stocks and the pay?
Well, the mark is 149.90. So if somebody that bought it last night took it home, they're actually break even as 149.95. The adjusted close because they adjust for the dividend there, so it adjusts down, and obviously that's the adjusted price. There's a few strategies that I've always played around there. It's typical that higher dividend plays are strong going into the dividend and week after. And McDonald's has fit that bill pretty well here, being strong running up into the dividend. Obviously, since then, though, we've we don't know what's going to happen after here. It is bid up here this morning, but if we're using that, we would think maybe McDonald's would be actually start to get weak starting today.
All right, and I'm trying to pull up the yield here. It's probably got to be getting pretty low on this with the price appreciation.
2.5.
2.5, really?
It's still 2.5. You know what? Back when it consolidated for those 2.5 or 3 years that you were saying between 80 and 100, the earnings kept going up. The dividend kept going up. That was the play. The dividend was like 3.5% back then. That was the play to buy it back then. I think if you're coming in here now, the stock was $110 in November. It's $150 now. I feel like you're so late to the party if you're buying it here now.
Right, and yeah, I mean 2.5 is still a pretty good yield on that. Amazing price appreciation here in Mickey D's, and I was looking at the daily chart here. 149. You have 4 lows in that area. So if you're trying not to pick a top and you rather, sell it if it breaks through some support, 4 lows in a row, right at 149.30, 149.40.
One of my worst. I'm just new here is talking about Starbucks. And it's 8:35, so I'll have to tell that story after.
It's all right. You can tell it after. At 8:35, time for our guest. We're going to take a quick break. We're going to grab Nate Tobik. He's an investor. He's the founder of CompleteBankData.com. We'll be right back.
Welcome back, traders and investors, to Benzinga's Premarket Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. We have Spencer Israel behind the glass, and we have Nate Tobik on the line. He's investor and founder of CompleteBankData.com. Nate, how you doing today?
Good. I'm doing very well. Thanks again for having me on. I appreciate it.
Yeah, boy, I tell you, there's been some interesting price action in these bank stocks. Before we get to that, can you tell us about oddballstocks.com and CompleteBankData.com?
Sure, absolutely. So on oddballstocks.com, I'm looking for out-of-the-way investments, a lot of times smaller stocks. These are more value stocks, longer-term trades. And Complete Bank Data, what we do is we take all the regulatory banking data along with market data, combine this together, and provide a great set of tools for investors and bankers to find trades, gain a competitive edge, and just view bank information in a better format.
Okay, let's talk the big banks here, and I'm going to start with J.P. Morgan here. Had this unbelievable run up to 93.98, and while the market continued to chug along with the tech stocks, this kind of lost its mojo here, and I was looking at the support at the 83.36 area. Now it took that out here. We're trading up in the pre-market, up 42 cents and some decent volume here, but to me, that big break of support, I mean, it's going to be hard for it to get back up. Give us your thoughts on J.P. Morgan.
Yeah, J.P. Morgan's interesting. A lot of the big banks, they beat earnings this last quarter, and they did that on the back of trading revenue. So the loan growth is about steady. It's about the growth rate of GDP, kind of normalized now. Where the big banks really have an advantage over smaller banks is the trading. And in a volatile market, they could make money hand over fist. In a flat market, they could make money hand over fist. And J.P. Morgan's trading revenue came in well above what was expected, and that really drove earnings. And I think we're going to see the same thing. So it's hard to predict that, right? You can't determine what a bank's going to do ahead of time. But these guys are extremely efficient operators, and they're always able to squeak out gains somehow in any type of market. So if the market keeps trending where it's been going, I think we're going to probably see another beat. Come around at the end of the quarter here in about a month.
Flack UK is asking, why is Goldman Sachs getting such a rough ride? I mean, that started to sell off, ahead of its report, got beat up after its report. Kind of had a couple attempted rallies here, but you took out that post-earnings low at 213 and change here. Any thoughts on why Goldman Sachs is really getting the beats?
Not specifically why they're beaten down now, but one interesting point on them is they're always 2 or 3 steps ahead of everyone else, and they invested in these Venezuelan bonds. I don't know, did you see that?
Yep.
So they're taking a bit of a longer trade there, although I think they'll probably recognize a profit pretty quick on that. And those are the type of things that you invest in Goldman for, because they're going to do something like that, and no one else is going to take that.
All right, a ton of debt, and I mean the cash too for that country, and probably need a little bit of a boost. But I did see that news yesterday. We'll stay with the big banks here. All very similar charts here. Any thoughts on Bank of America?
Bank of America, they I guess they're relatively undervalued, although I would wait. Last year they took a dip. I mean, this is a pretty cyclical thing with all these big banks. They tend to trade down a little bit before earnings, and then amazingly they always surprise and pop back up. So you could play that. That's a pattern that's just been repeating for the past couple of years. And these big banks right now, there's a lot of political pressure. So recently the president came out and said we should break up the big banks, and then they all traded down. And then a couple of days later, someone else came out and said, no, we're not going to do that. And it's like, we don't really know what is actually going to happen. I think the best trade is to say the status quo is probably what we're going to be seeing, because it's just easier to keep things as they are versus breaking things up or try without some sort of a crisis or an event to push that forward. So when there's talk of breaking these banks up or there's a lot of fear, I think that's time to buy. And when they bounce back a few days or a week later, take your gains on that trade.
Nate,
go ahead,
Nate, I
Dennis.
just want to jump in here. Dennis Stick here. I just want to ask you, just while we're talking the whole sector here, what are your thoughts, on potentially, Trump, coming in with Dodd-Frank and maybe, deregulating the industry here? Do you think, that's going to happen potentially? Is Dodd-Frank, going to be chopped up here and we're going to, have the wild west of banking here again? Or is that just going to be too difficult to do?
I don't think it'll be chopped up in its entirety. I think what might happen is we might get some loosening regulations for community banks, especially because the Treasury Secretary used to be in the community banking sector. So there's a lot of smoke about how terrible these regulations are. And as you scale up, the bigger banks are spending tens of millions to comply with everything. But when you really start to go down the list of asset size, some of these small banks really aren't spending that much to be compliant. Relative to their net income, it's a large amount, but on an absolute basis, it's not. So, my thesis has always been banks need to merge, be consolidated, and grow in size, and scale. Banks need to get to about the $1 billion asset level, and at that point, the regulation isn't terrible. It's not a burden to them, and I think we'll see some movement in that direction. I don't think it's going to disappear altogether, but that's one of those news items that when this comes out, people panic, and if they hear the regulations aren't going away, they're selling the bank stocks, and when they hear that everything's going to be ripped up, they're buying them, and it's a very people have the finger on the trigger type of a. That's what a lot of bank investors are. They're riding the waves, and you aren't seeing people who are buying bank stocks and hope to hold on to them for the next 15 years, like a blue chip, for example.
How about this move here, tied to the bump in interest rates? And we were talking about a little bit yesterday. One of our Dennis's trader buddies is looking at the yield curve and thinking, you know what, the Feds might back off here on raising rates. What do you think a little bit of this sell-off is attributed to the fact that the Fed, may be done for the year?
Definitely, and this has been a source of earning beats for a lot of banks. So if you take your interest rate view and you think rates are going to be bumped up, the best way to play that trade is to look for banks that have a high portion of their assets in short-term securities. And what that means is they're constantly turning these securities over, and when the rate goes up, they're going to harvest a little extra yield, and that'll probably translate into a slight earnings gain. The opposite of that is also true. So if you think rates are going up, there's a lot of banks that went way out on the curve and they have 10, 15-year securities sitting there. They're going to take a hit on that. And these are the type of banks that when they release earnings, they say loan growth was excellent, deposit growth was excellent, and then you see that earnings last year were 25 cents, and this quarter they're 10 cents. And all of that could be attributed to the hit on their securities with the move in the rate. So depending on your rate view, that's definitely a source of, that's what happened with Bank of America. If you look at the most recent quarter, the majority of their earnings beat was due to the short-term move in rates.
Besides Bank of America, is there any stocks that fall into that category?
Not specifically. I have some other interesting stocks.
Okay, give it to us.
Yeah. So one I think that's worth checking out is Hancock Holdings. This is HBHC, and they're a large bank, about $25 billion in assets down in New Orleans. And they recently took over the failed First NBC Bank. And so Hancock Holdings was hammered for a while because of their energy loan exposure. And as of the last quarter, they still had about 7% of their loans in energy loans. And they claim they're fully reserved for those. So, we might not see problems going forward. But what's really interesting about them is they had a bad first quarter due to the acquisition costs. They had to raise some capital to buy this competitor bank. But what they've done is they've locked up that New Orleans market, the southern area there. They also have the potential tailwind as energy comes back. And so if some of the energy loans don't go bad like investors are expecting, you could see a boost. And it could come quickly because energy, it's all on the commodity prices. And if we get an uptick in some of these prices, the fortunes of the companies they've lent to could change extremely quickly.
All right, let's stick with the smaller bank theme here. Any particular areas, regions of interest in the small bank area?
Yeah, so I'm in the most banks have moved up since the election. It's really the banks that don't have great fundamentals that are trading still below book value. One bank that I think is interesting is Sunnyside Bancorp. The ticker is SNNY. And they're a converted mutual bank. They converted in 2013. And this is really the perfect bank for a takeout. So they're in Westchester County, New York. It's a great location. They're right on the Hudson River up there. And they haven't really been able to turn a profit because they're too small. They don't understand how to raise deposits and grow their loans. If you look, the top executives are all in their 60s and 70s, which is a great age to retire. And these guys, if you took out the top three executive salaries plus the IT costs that would be reduced in an acquisition, you're basically looking at a bank that's trading at about 10 times or a little less than 10 times post-acquisition earnings. And so, I think that could easily move up another 20, 30%, maybe even higher, depending on how bad someone wants a foothold in that upstate region.
Nate, let's take it over to the Europe and just looking at some of these European banks. Just recently here, we had a big run up in April, and now recently, like stocks like Deutsche Bank selling off heavy there yesterday, significantly off their highs. Barclays is weak here again. You can look at RBS, Royal Bank of Scotland. It's starting to look a little bit head and shoulder pattern there. Banco Santander, a little head and shoulder. European banks don't look as good as they did a month ago. What are your thoughts here on Europe?
No, Dennis, I don't follow the European banks as closely as I do the American banks. What I would say is, with a very broad brushstroke, the European banks, they're not as well capitalized as the American banks. But the flip side of that is that they probably have more significant government support as a backstop. So, if we have some sort of a downturn here, you're probably not going to see the wholesale crisis that we had in the U.S. Because of that backstop. But at the same time, these guys are playing closer to the edge of the cliff.
And any banks here that you have your eye on the short side here? We have Johann Smith asking that.
Well, yeah, and that's so one bank that I'm very suspicious of. I think it's worth a closer look is Bank of the Ozarks, and it's OZRK. They're a loved growth story, and they've grown and compounded at these fantastic rates. But if you really dig down to some of the chatter on the internet and look into some of the quality of their loans, these guys are making loans in markets that have questionable quality. So in New York, they're pretty much bidding up anything. They'll take any loan. They're making loans where they have to put in a lower level of equity compared to what competitor banks are requiring. And so they really outran the last crisis. They continued to acquire new banks and pull those assets in, and they outran their problems. As a friend from Arkansas told me, he said, Arkansas banks like to play really close to the edge when it comes to construction lending. These guys have a significant portion of their portfolio in construction loans. And just because of their size and their growth aspirations, they're gobbling everything up. And if you look at any banking history, this is kind of the recipe for disaster eventually. So if they don't get their asset quality in check and slow things down, it doesn't take that much of a bump in the road before they need to either raise significant capital or they have some serious problems.
Yeah, we all know what could happen when housing loans go bad. Nate Tobik, investor and founder of CompleteBankData.com, giving us a look at the banking sector. Thanks a lot, Nate. We'll have you on again soon.
Thank you very much.
Thanks, Nate.
S&P futures up $3 here, 24.1375. Let's see here if we can continue this rally. Major resistance at that all-time high. Four highs up at the 1775 area. Dennis, 9 minutes. Did we do any ratings changes today?
We didn't yet. There's not a lot of significant ones. There was a few on the radar. Spencer, you want to where do you want to go? There's about a dozen, but there's not that many that are really jumping out like whoa.
Well, we were saying on the pre-market show, the only one that I wrote down was Morgan Stanley on Goodyear. They upgraded Goodyear from underweight to overweight there. And then I saw Oppenheimer initiated Caesars, CZR at Outperform. I saw one more. Nope, that was really it. Just those two. Oh, Skechers caught an upgrade from Citigroup. And that's really it. And Box follow through from earnings, but nothing else.
Wait a second here. Goodyear tire. This thing's popping $2.
Big time.
What do you think about
that?
Big
time. It's a big pop, but it was a big bump from underweight to overweight. I didn't see the price target on this, but I thought I saw 50 go by my timeline there. I'm not sure if that was right or not. I actually thought I saw a $52 price target. Not sure if that's right, but that's what I'm going off Goldfish memory last night when this actual rating came out. But GT actually it was this morning. But GT 34.18, 6% is popping. You're right, Joel. And you think about all the overhead supply you're running into. I mean, this thing's traded between 34 and 37 for the last 3 months, and then it just sold off. Now it gets right back to this area on the upgrade. I think there might be some people ringing the register.
Yeah, let's take a look. I mean, are they getting this up on just a couple thousand?
Pretty good volume, 17,000. I mean, I'd expect it to be up $1. Because it's a pretty big raise, but $2 seems a little bit overzealous.
Yeah, let's see here. You do a couple highs to contend with. Your pre-market high comes in at 34.20, but it's right there right now, not backing off. I see a pair of highs here at 34.33 and 34.43, so 34.38. That's a number. If I was lying to saying it got caught to that dip down to below 32, 31. I'd be lighting it up here. We'll see what happens. Above that really opens up to above 35, but I think it's too much, too fast here for Goodyear Tire.
And let's just jump over to the Skechers chart, SKX, because it is catching an upgrade here this morning as well. Skechers lifting here, 26.40, so big pops here on this upgrade too, up over 3%. Stock's been on the comeback trail. It was down to 23 just a week and a half ago. Now we're in the 26 handle. This is, where's your 50%, Joe? You go 30, down to 23, $7, $3.50. I mean,
Right
you're
there.
right there. You're right near the 50% retracement.
Yeah, and also you have two highs supporting that level as well. From April 20th and April 21st, 26.43 and 51. So, like potential resistance there at that 26.50 area. And this thing had really fallen from grace. Man, this thing got up. I know it had a split in here, 54.53, and then got under $20. 22.64 was what was the low of that move here? No, it got under $20. Nice rebound, got to 18.81, but short term here, keeping an eye on 26.50.
Just jumping over here to the imbalances once again. Pfizer's buy imbalance has grown to 165,000 shares here now, so that's obviously significant here. I'm still looking at I'm just looking at some of the banks, and they are starting to leak a little bit, but some of them still have sell imbalances here despite trading higher here on the day. But the banks do look, it's interesting morning. It's starting to look like the yield play is on. So, obviously, with interest rates, just looking from that ADP data, the banks started getting hot. And if you look at something like the TLT is getting hit here a little bit here this morning. XLU's down a little bit as well. So it looks like money wants to come into the banks, but it's kind of hesitant. And it was getting a lift, and now it's not. So it's a wishy-washy day, I'll call this one.
All right, mixed imbalances. Let's just check a couple stocks. PANW, Palo Alto Networks, with the big earnings beat. Got up to what, 135? Let's see if that is given
It's a
back.
big number.
Yeah, that's
it's right there. Still just trading in the range.
Right, and also, we had Ciena up on earnings beats here. Let's see if that was 26.47. That began to
the one I want to look at is Dollar General. And you know what? You're in good shape here, Joel. And that bet that I made earlier, because it's starting to lift up here again, 75.80. So I said it might trade 74 here today and made a lunch bet with Joel, but doesn't look very good for me right now. I was hoping it would leak a little bit faster than it is in the pre-market.
Yeah, but it will for sure have a big range as always. Let's just check a couple more stocks. We were talking about some of the banking stocks from yesterday, Dennis. Nate seemed to be still bullish on these big banks here. J.P. Morgan had that flush out yesterday.
Oh, big time.
Yeah. Actually, I did see some news on that yesterday. I think it was a J.P. Morgan official said that they're looking at trading profits to be down a little bit. So I think that weighed on the banks yesterday, and then the overall break in the market as well. If there are any symbols you guys want us to cover in the chat here, I do see one here. Another blowout quarter from TECD. Do we have the numbers for that company? What's that? Tech Data?
Wait, EDCT?
TECD.
Yeah, TECD.
Oh, Tech Data? Okay, yeah. Q1.
Yeah, it's up 5 points or 4 points.
Q1 adjusted EPS of $1.87 versus $1.34. Sales of $7.664 billion versus $7.32 billion estimate. So a good Q1 there for TEC. I never heard of this ticker.
Tech Data, yeah, up big time here. $100, big psychological level. I know it's trade 101. I would just think, that's your psych level is $100.
Yeah, all-time high. This issue is trading at the former all-time high was made last month at 99.30. So if you're looking for a pullback, that could be a potential area of support. In order to get to the top of yesterday's range and fill the gap, get way down at 97.34. But for now, you seem to have a seller here at 101. That's where the couple thousand shares have traded. So keeping an eye on that one. All right, 8:58. Spencer, you want to wrap up today's show?
Before we wrap up, I want to talk about L Brands. We missed that one. L Brands had May comps down 7%. Their Q1 comps, which they reported in their earnings report 3 weeks ago now. Q1 comps they had down 9%, and May they down only 7%. So they're improving. They're up 2%, huh?
Oh yeah, so only down 7% is supposed to be good news here. Outbrand's got a little bit of a lift actually on those numbers, up to 52.10. It started to leak here now. Best bid's down 51.30. It just traded 51.60, so it looks like it's giving back some of those gains. So I guess 7% down is better than 9% down, but still doesn't sound like great numbers to me.
Let's just check out the pre-market high in L Brands, 52.50. If in fact you get back into the $52 handle, not a lot there. I don't know why we had a spike up to 53.13, but if this really goes into rally mode, we'll look for that. If it goes red on the session and starts to sell off, you have a pair of lows and the lower 50 handle, 50.20 and 50.07, but not a lot of trading yet here. S&P's up 4 here, 24.15, knocking on the door here of that quad top. We'll see what happens early in the session. Spencer, you want to wrap things up now and
Sure.
preview the final show?
Looking ahead to tomorrow's show, we've got Joe Saluzzi, one of our favorite market structure guys. I saw a headline that come across my radar this morning about IEX looking to list its first stock later in the year, so he'll be able to talk all about that. Joe Saluzzi, he is Themis Trading out in Chicago or somewhere near Chicago. Joel, you know better than I, but so Joe Saluzzi. Jersey? Oh, I stand corrected. Yeah. And he is the co-founder of Themis Trading. So look forward to Joe tomorrow on at 8:35. As far as today's show, you can catch the whole show again on our podcast on iTunes, SoundCloud, and Stitcher. If you want to listen to our show live every day, you can do so on premarket.benzinga.com or on Benzinga's YouTube channel. Don't forget to subscribe to that. Benzinga TV is the name of the channel on YouTube. It's where the show airs. Also, if you're not wanting to watch it and partake in the chat on the Premarket website, so there's YouTube, there's the podcast. That's where you can get our show. Please remember that all the information and material and content on our show is for informational purposes only and not meant to be investing advice. That's it. So have a good rest of your Thursday. We'll see you folks tomorrow for the final show of the week.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.